My name is Max Gagliardi, and we're here live with co-host David Heikkinen and guest today, Mike McGlone from Bloomberg. Mike, appreciate you taking the time. Thanks for joining us.
Oh, well, thanks for having me, particularly on a Friday before our week. Thank you.
Yeah.
Good,
Go ahead, David.
It is a good lunch hour special, so I appreciate the time. And we got a lot we can talk about. We'll kind of keep this 30, 40 minutes. I've been following Mike for a while via Bloomberg, and so this is the second time on Max's pod, but really do look forward to the conversation. And we'll get some questions in probably through listeners as well. So really a little bit of Mike's background. So really is the commodities guru and knows a lot of stuff about both commodities and Bitcoin. Where we overlap more is on the crude, gas, NGL side, but definitely have had our own conversations a lot around cryptocurrency. So we'll keep this on the crude side. You had some interesting thoughts, and I'm just kind of curious how you're thinking about, where the crude oil setup is now. We've got geopolitics happening. Mike, very quick introduction, and then we can go into, where the crude markets are headed, short term, medium term, and longer term. I know that Max and I have some differing opinions around that. I'm an oil bull in the near term, and we'll see when demand starts getting waning in the longer term around the transitions. But let's kick it off, Mike, and roll from there.
Well, thanks for having me. And being bullish in the near term has been the right trade, so I can't congratulate on that. To me, my background's come from the trading pits of Chicago. That's kind of my connection with Canadians in Toronto. I always kind of felt I had a similar upbringing and the similar weather, and I guess I'm kind of a wannabe. I love traveling up to the Great White North. But to me, I always look at everything as things I really learned in the trading pits, and then of course, I spent a few years on Wall Street. Now I'm in Miami. And the way I look at crude oil is very simplistically. Right now, it's about geopolitics. It's about 128,000 Russian troops on the border of Ukraine. Russia is one of the largest exporters of crude oil, and Ukraine's one of the largest exporters of grain. You would expect prices to be bid in that environment, and I fully expect it's just posturing. And I'll get into, to me, the repercussions if they do invade, because I think what we're going to see is some severe mean reversion. And so the timing on this is perfect because we scheduled this time. You incentivize me to get to the editors my energy outlook early, which will be published on Monday. My focus is going to be what's the significance of $60 versus $100 crude oil. And here is the key thing: is right now, if you look at crude oil since the start of 2020 and compared to money supply, it's up almost the exact same 40%. So stock market, it's up almost the exact same 40%. Yep. And I've been all over the country. I just moved to Miami. I've been buying property and selling property, and everybody says it's such a cracker boom. I'm like, okay, how much is it up? Almost the exact same as money supply. And so I look at this as copper is up only about 50% versus money supply. And I view copper as very bearish, partly because of one key thing, elasticity of supply. The difference is we need a lot of copper. We need more of it, decarbonization, electrification, but China is going in decline, basically. And I can dig into that. Yep. The difference with crude oil is if you look at North American production, U.S. and Canada, it peaked at 24 million barrels a day in 2018. And this year, supply is going to reach maybe 28 million barrels. So there's going to be a deficit. Next year, the deficit will reach 15%. I say that because people say, oh, it's Asia demanding it. It's like, yeah, I get it. But they're going to follow North America, where they're increasing, their emerging markets that are maturing. We're a maturing market, and we're maturing away from using less fossil fuels and creating more of it because of technology. So that's the macro. The shorter term is I fully feel like right now the lessons I learned in commodities is the people told me, oh, we're going to have peak oil 10 years ago. We're all smarter than me. Are trying to bring that theme out again, and I'm like, good luck with that one, because I've been driving an electric car for 8 years and it's awesome. And the top selling vehicle in the U.S., the Ford F-150, they can't make enough of those electric. So that's the macro. The micro to me is bad. To me, this is a short-term bid, and I fully expect crude oil to head right back down fast. Particularly when you see days like today, copper down 3%. Those are the most significant macroeconomic commodities, WTI and copper. and they just virtually never can disengage too much. And copper's telling me, and some other commodities are telling me that, good luck with crude oil because we can create more of it. We're using less of it, but we definitely need that copper. So, and then I'll dig into the macro a little bit. I mean, I'll end with this. Don't fight the Fed. If crude oil goes up, the Fed's got to tighten more. It's that simple.
Mm-hmm.
Yeah, that's where I was going to go with it. Is like the Fed's role in all this. I mean, it seems like Hike and I are kind of in an echo chamber around a lot of oil bulls, especially on Twitter. You've got a lot of guys that think it's going to go. Hear predictions, 120, 150, even people throwing out things like $200 a barrel. And there's, being somebody working in the oil and gas industry, I get excited. I like to hear that stuff. It's fun to think about. But I just think that the headwinds with, if the Fed, does decide to tighten, I mean, isn't that like playing into what you're saying, Mike, your case, right? And it seems that's like the way things are going. And I don't hear that narrative as much in the oil Twitter space.
Well, now that's the key thing that you learn in commodities. People in commodities are trained to be bullish. And I've learned that a lot. I ignore most of the Twitter comments, but if you get bearish, especially things like in cryptos, they can get upset with you. But here's another thing. We have midterms coming up. And if there's anything that's going to really tilt the populace away from Democrats, they're already losing already, is higher crude oil, higher gasoline prices. So there's major incentive now to stop this. Not only the normal elasticity of supply, but our president now is going to learn a little lesson about drill at will. That's worked great for Trump. And, when people are not being taxed to death when they pay for it, when they try to just drive the work, that's probably a good thing. You don't want to be blamed for that. Right now, he's getting blamed for it because he turned on all this great ESG stuff, which it doesn't matter right now. I don't drive my pickup truck to work so I can make a living and support my kids. So he's getting crushed. Crude oil's part of it. And if he doesn't address it, it's a problem. And I look at it this way. Let's look at also what happened with natural gas. Remember November? It was priced for a really cold winter, got up to 6. Okay, where's it now? Below 5. It's been doing this for decades. Why? Because U.S. supply comes on. And yes, we're getting extraordinarily cold winter. I mean, it's definitely in nor'eastern coming this week. I've been in Miami. It's the first summer I've ever spent in a warm climate, so I ain't complaining. But the key thing is, if you're bullish crude oil, I said, look at nat gas. What is it? Massive supply. What's the only thing holding it from not dropping below 4 is LNG exports. And those are picking up because Europe is finally realized they shouldn't depend on Putin. Now let's look at what's probably going to happen in Ukraine. Putin's posturing, he's going to pull back. And then we're all going to realize, that supply is coming right back. Corn's expensive. I mean, Ukraine's a major exporter of corn, most notably to China. Crude oil's expensive. And bam. Now what if they do invade? Here's what, if there's any type of little limited sports stir, that's so bullish for North America. I mean, the world will say, we want the buck. We want U.S. and Canada. Someone's typing real loud. We want U.S. and Canada supply, and the U.S. and Canada crush it because it'll give those. Right now, the average cost of shale right now is below $50 a barrel. So give us $100. Amen. They will just, I'll love to buy those equities. And then just look at Canada, grains and oil sands. This would be such a boom for North America. It'd be a complete boom. It would really embolden NATO and strengthen them and crush Europe. I mean, it really hurt Europe. Europe will have to go straight to U.S. for everything. They're going to realize what we've been warning them forever about Putin's natural gas. So to me, if he does invade, it's going to be horrible for those people on the line. And I have a son in the Army, so I don't want him to have to be in harm's way. So I'm in harm's, our family's got blood on the line. But this is one of those things that just look at the repercussions if he does. This is such a boom for the largest energy producer and agriculture exporter on the planet, U.S. and Canada.
Now, it's an interesting time of politics. I've said this, and a lot of people that don't like it, that oil and energy actually did better under Obama and is doing better under Biden than it did under Trump. And so I've become increasingly, the bias of 4 rate hikes is in an election year. You look at the manipulation of the Fed from a political standpoint. I mean, we've got Supreme Court justices swinging out faster and only saying they'll retire if the Senate approves the backup. The politics of 2022 are strong. And I actually think that when the consensus swings to 4 rate hikes, it actually made me more nervous. I mean, energy, I do stocks. And so crude oil is the biggest driver for energy stocks. And I've been covering them for 20 years. But the reality is like, the value to growth switch is the other thing that I fear. And you start thinking about efficiency gains, and because we've totally gone growth to value. We've got an inflationary environment being priced in. We've got 4 rate hikes, and energy always does well there. And the one thing that you said that I'd take the under on is the U.S. supply response now, because it does feel like we've got a real consolidation of all of the private companies into I call it 2 handfuls of oil companies, 3 majors, BP, Exxon and Chevron, the independents, Conoco, EOG, Pioneer, Diamondback, and then a handful of privates are really driving the Permian, and they're going to underperform what they've done the last couple of years because they've kind of peaked out on activity, and all the publics are trying to give cash back to try to woo back the 10 years of capital destruction that we saw that resulted in a deflationary environment, really fueled by shale. The technology revolution, no matter what you say, the Bitcoin revolution, I say you could say it's the thank you for the $700 billion of value destroyed in the upstream oil and gas space in the Permian. But yeah, I like your thinking. I'm probably north of 80 for the next couple of years is my thought. Long dated, price of carbon gets into these stocks and into the world, and that poses some headwinds for further inflation. Because every dollar you get up, it causes more people to transition faster. And I know I'm kind of priming Max for that because he disagrees around that thought process. But Mike, when you think about copper, you hit. We actually start off every one of our Tuesday calls at Pickering Energy Partners internally of where's copper price. How do you think the linkage is between the direction of copper prices, just fundamental demand around electrification versus, what's going on in China as far as workforce growth shrinkage and just kind of the transition? Can you talk some more about copper for our listeners and what's happening?
Which I'll transition to that a little bit. I really appreciate your insight. It's the consensus and the key thing I like to add to that is just a little lesson being a farm owner is when you own the land, you can make money with that land. You'll find ways to do it. And then I just look at the hundreds of independent oil producers in places like Getterville, Texas. And I keep being told the same thing, that supply and demand elasticity don't matter anymore. And I'm sorry, on a scale 1 to 10, I'm just an old commodity guy who starts in the grains. That means prices are up, you bring on supply. But I get it. Everybody says ESG, we can't produce as much anymore, or we won't. But I don't agree with that. I just have to focus on, I think on a 1 to 10, that's 2 to 3. But it is the consensus, and it has been right. But it's forward-looking. It's just the same thing. Man, I have to remember, I was 15 years ago and 10 years ago being told, it was peak oil. I'm like, what's peak is North American consumption. So I look at over copper, and I'm like, if you're a long-term energy investor, the last thing you want to hold on to is energy or grains. They're the worst. They will crush you because you have to roll into contango. Yeah, you get backwardation once in a while. But first of all, that's a horrible way to do it. I always say go for the metals. Energy, they just gold and copper together are probably all you need. And then you look at copper, 10-year basis, it's up like 20%. 10-year basis, crude oil's down like 10%. Now, if you look at, is that a rolling investor, you're getting crushed in energy. The way I see copper is it virtually never does well when China's cutting their triple R rate. Crude oil doesn't either. Then they're doing that. The way I look at it, everybody's talking about this incremental demand from China. It's already starting to diminish. 20% of sales last year in vehicles were EVs. And it's already seen incremental decline, and they're declining. It's just the things in property that some of us have been predicting and expecting for a while starting to kick in. And so I look at when China cuts their triple R rate, number one, don't be long commodities. It's just a lesson I learned since the peak in 2011 when they first cut the triple R rate. So they're doing it again. People say it's good. No, they're expanding to a poor economy. So there's the world's largest consumer and user of copper and aluminum. And so I just published my energy, my metals outlook this morning. My headline was buy low, work in 2020, but in 2022, it's commodities are high. Aluminum's high, copper's high, China's peaking. And also, when you cannot talk about copper without talking about interest rates and the relative strength or weakness of the U.S. stock market. I look at the stock market, it's just starting to mean revert. It's, the highest ever, and it's against its like 60-month average. It's the highest in 20 years. I look at U.S. interest rates. If you want to look at copper, look at that Treasury long bond. It peaked right about April, May last year. Copper peaked around the same time, and it still can't get above that 2.5%. That's despite the consensus. Like you mentioned, like everybody tells me, oh, they're not going to produce like they used to.
Well, what amount of oil growth do you think we're going to have in the U.S. this year in 2022 over 20?
So that's why I rope in both. So I'm just looking at the Department of Energy estimates, and what I see I have to rope in U.S., Canada. I use liquid fuel because let's not forget, as a farm owner, almost 15% of U.S. unleaded gas now comes from methanol, and then they're kicking in biofuels, and that's just part of being a farmer. And guess what? We still pay our farmers not to produce. Not just we. I mean, not just U.S. That's most countries. So I look at the maximum big pictures. I can pull up my charts, but total liquid fuel production in U.S., Canada will probably reach around 27 million barrels a day towards the end of this year. And that's just based on Department of Energy estimates. Total liquid fuel consumption peaked around 24 million barrels. It might get to 23 million barrels a day. There you see it moving on a 15% surplus. Now, that's just based on estimates. I don't think they even factored in the elasticity of supply and demand. So remember, what this process is doing, it's accelerating people like me buying F-150s and Ford Explorers. I mean, those sales they can't sell enough. Now, that's early days. But the key thing I like to point out is just with the efficiency, total liquid fuel consumption in U.S. and Canada peaked 4 years ago. That's just efficiency. Now, just look at, if you want to look at CapEx, automakers, they are loading up on EV. Okay, so that's just going to look forward. So then I look at just simple, shorter term stuff. The Fed has to have lower asset prices or it will tighten. And right now, they're just jawbone. And typically, I don't think they will be able to sustain a tightening cycle. They haven't been able to for quite a while because markets are doing for it. Now, the stock market's already started to do it. Copper, you can argue maybe he's done that a little bit. Crude oil's emboldening them to tighten more. So I wrote a piece recently. If crude oil keeps going up, it's bad for all assets because it means that punch bowl, that liquidity the Fed's been providing since the 1987 crash is gone. They cannot. And then you look at most of these inflation metrics are probably peaking, but they're not as commodity sensitive. They're sensitive to owner's equivalent rent and employment cost index. So I look at it, it's like, and then let's just make this simple. Buy low, sell high is what I learned in commodities. And commodities are high. And the time to buy, and that's what I love about human nature. They usually chase the last rally. The time to buy commodities is 2000, 2021. It was awesome time. And I just learned a lesson in commodities. When everybody gets bullish, you want to turn around and say, thank you very much, goodbye. Now, you can do that in equities. It'll last for a while. But I think it's over in equities, too. And that's why I look at it. If I'm right about the need for the equity market to at least have a 20% correction, there's virtually no chance for commodities. Now, right now, we're seeing a little divergence. But just give me a little bit of, just a little bit of reversion in what Russia's doing versus Ukraine, which I fully expect will happen. And this thing, we see WI going dropping back towards that.
Yeah, I think the thing that's interesting is that we've gone so fast even this year. I mean, you've got energy stocks outperforming the renewable stocks. Like our iClean index down 17%, PBW down 28, 29. And you got energy up 10 to 15 with some up 20 plus. And so the spread of NASDAQ and the growth to value reversal has gone so fast. I think the thing that I'm wondering, and as I think about what you said, so what would be the reason why oil would stay higher in your mind?
Okay, so I think we need something to change what kept it lower for the last 10 years. Let's say, remember, the flush in 2014 happened for one key reason. Massive oversupply from the U.S. So first I want to address what you said. There's massive profits in the oil sector. I think that's wonderful for equities. It's bad for prices because how that does not translate into more supply just is an oxymoron with the rules of economics. So to me, the key thing to keep prices higher this year is a rapidly expanding global demand pool economy. You need that demand pool. We haven't had that demand pool for 10 years. Why should it start now? Look at natural gas as a great example. If there's any commodity on the planet that's being used for everything, massively increasing demand, it's shifting. Who uses anything but natural gas, electricity anymore? You use anything it's so, yet that price can't get above
China, India.
Exactly. Well, but the point is, this is the U.S. benchmark, and they can't export it fast enough. So first I'll start to say was people who are bullish crude oil, I'll say look to natural gas, and then look to copper. And I say, okay, which one's more likely to sustain? Natural gas has been just a leading indicator for crude oil. It's just been a few years ahead. So to me, we all know to sustain any bull market in commodities, you need demand pull to out elastic supply. Mm-hmm. And to me, in crude oil, if there's any time, a paradigm shift in the history of mankind, this is a person who drives an electric car and has solar panels in his house, and they are awesome. That technology is amazing. And I only done it because I've used it, done it cost effectively. And now it's hitting the masses. And then I look at what's happening. So what's the short term? We have an election coming up. The worst thing for the Biden administration is for gas prices to go high. And then we're going to get into some of Glenn Perry. So he needs crude oil to go lower. If he's smart, when he said last time he released from the SPI, I said, well, just lighten up on the restrictions and a little more drill it will. It'll come. The market will price it in for you. If prices go lower, they won't drill as much. But the number one incentive for more supply, less demand right now is where we're priced. It's higher prices. Yeah. So I look at average cost of U.S. shale based on my terminals, $46 a barrel. And we're about double that. In 2014, average cost was $70 per barrel. Just look at the cost of oil, Canadian oil sands. Obviously they're costly, but they don't go up. They've been going down despite this massive increase in money supply.
Yep.
Yeah, I was going to say, real quick, I know some people have their hands raised. We're going to do some questions at the end. We'll probably do 10 more minutes here, and then we'll go into maybe 10 or 15 minutes of questions. Mike, we talked about it last time, and this idea that technology is deflationary. We talked about Jeff Booth's book, and I think that if you think about oil and gas, I'm generally have been bullish on both prices, but maybe I'm in my echo chamber. But, one point you made last time is that, look, historical prices, it has been deflationary on an inflation-adjusted basis. And, the shale revolution and what we've done in the U.S., that's highly disruptive technology. And so it would only make sense in some ways that when a highly disruptive technology comes into the market, that it causes a deflationary effect. And so we'll see how that plays out. But I think that kind of is a good segue into the last segment here. Spend just a little bit of time on Bitcoin and maybe crypto in general, because I know this is something you post a lot about, and then we can open it up for questions. But the recent Bitcoin price movement, you've had kind of a wild whipsaw last 12 months. And then the prior 12 months, you saw just kind of parabolic moves upward. Just your thoughts on these recent near-term movements, what's going to play out long-term with the Fed, and just any commentary there to start that conversation.
Well, that's where I have, as a commodity guy, have turned towards Bitcoin is the complete opposite of what I see in crude oil. By code, supply is declining, and there's no elasticity. I'm like, oh boy. So when you're a commodity guy, you go back a long time and look at that. I remember talking to Sal Gilberti, who runs 2 Korean funds. We're both like, whoa, this is pretty amazing. So all that matters is demand and adoption. And I clearly see it's a fact that Bitcoin is replacing gold in portfolios. Now, that has been a fact. The question is, how do we extrapolate in the future? I'm like, okay, I fully expect that to continue. It is the digital collateral, the world going digital. It's the world's most significant digital property right. And NFTs are just, examples, and then there's 17,000 other ones. So that's one problem. But I look at it as, this is the difference in this space. It's a nascent technology / asset. Most asset managers are on zero. Most asset managers on the planet every day realize they probably should get off zero. And I think that's what's happening. I'm seeing buyers in Bitcoin and responsive buyers, and near these levels, anywhere near 30, and responsive sellers in the stock market. And so I look at it, give it 5-10 years. What's more likely to appreciate in price? So I wrote that recently. Actually, Bitcoin is probably going to continue to outperform crude oil. It's going to probably continue to outperform copper. And then there's a big difference of it's so much easier to hold and store. That's just the future. Look what happened to Blockbuster. And the world is going digital. So that's why I see that. The bottom line is simplistically, now we have a significant Cold War going on. And China has banned crypto assets. Why? Because crypto assets are crushing their system. Let's look what's happening in the space. The most widely traded crypto assets are not, they call them stable coins, they're crypto dollars. 98% of all these so-called stable coins track the buck. I have it, last metric is about 170 billion. It's more than almost 10x from last year. And that's why, because it's just a much better way to transact, transmit, transport, and you earn interest. It's just like Eurodollars were when they started in the 50s and 60s, but that Cold War. So to me, that's the way I look at it. Bitcoin is if you want a commodity super cycle, let's might as well find something where you can't increase in supply with technology. Boom, it is a technology. Okay, there you go. Something has to fail or some trend has to end. And I think what happened with China means the U.S. is going to embrace it. This is part helping mark potential for the peak of the Chinese Communist Party. And it's showing the limits of the Chinese system that does not have open discourse, open capital floors, and free capital and free accounting systems. It has to do whatever President Xi says, more so every day. And to me, also the key is some of the key people who have been allocating to crypto dollars and Bitcoin are Asians, and a lot of it's Chinese. Why? Because they know what's going on. We saw this in the Soviet Union. So to me, that's the big difference when you analyze your standard old guard commodity, even like gold. I mean, the best way to get more gold supply is boost the price. And I guarantee you, grandma's going to find some gold jewelry she's going to sell. You can't do that with Bitcoin.
No, I love your thinking of stock and flow and not a currency, but a commodity. And, in a limited supply, actually, that may be the best summary of, an increasing value. But, the limited supply, Max and I talked about this. I guess you have a bunch of Satoshis out there, and all the Bitcoin maximalists will say that it is a currency. But when you have currencies, people want to transact around it. So people want to hoard commodities that are going up. And so it's a really interesting phenomenon. I own Bitcoin, and I'm trying to be like some open disclosure, and I think it is actually should be a meaningful position for most people. That's not investment advice. I just think it's disconnected from the rest of the commodities and the markets in many ways. And that volatility probably scares some people away. But I think thinking of Bitcoin as a commodity may be the most interesting thing that I've heard you say today, because it is actually a different way to frame it versus a currency.
Well, let's also clarify Max, just one little clarification. There's Bitcoin, and then there's 17,000 wannabes. There's Bitcoin, Ethereum, crypto dollars, and 17,000 wannabes. So I looked at the space last year, massive speculative access. The dog coins, they're just silly. They're supposed to go away. But now we're getting down to the nitty gritty of billing of this revolution, just like the internet did, and it had to flush in 2000, 2001, and then now we have Amazon and Google.
Yeah. Well, and a lot of the, and I'll go into the last question on this topic, and then we'll open it up. I had someone else jump up here, but I've heard a lot of the FUD, the fear, uncertainty, and doubt around stable coins. You saw Biden administration saying they're going to put out some kind of executive order. I've got some people that I really respect in the Twitter community that do Substacks, and they've warned about stable coins and saying that the crypto market is hundreds of times levered and there's really no dollars there, and that's the risk. But my opinion is two things. One, I think that, and we've seen Bitcoin draw down 90% on a half a dozen times, and it just kept going afterwards. And so it's like, it's kind of this like 24/7 unregulated thing, and we've seen massive crashes, and that's kind of what people are signing up for in a way. So it's if that were to happen in the stock market, it would be catastrophic. Obviously, it's a bigger pie. But so that's one thing. I think that even if there are these sharp drawdowns, I don't know that means the death of anything. And then the second thing is that the Bitcoin purists don't like the regulation, and there's a lot of good reasons why they don't. But at the same time, it also, I think, provides certainty around the framework in which this ecosystem operates, and therefore probably is bullish in some ways for institutional investors.
Oh yeah, well it's going mainstream. Guaranteed volatility is going to continue to decline. I've shown it has going down. The best way to measure Bitcoin volatility is relative to other assets. So you look at it like versus the NASDAQ. It's about annual volatility is like 3x in NASDAQ. A couple of years ago it was 5x. A couple of years ago it was 10x. Versus gold, it's maybe 4 or 5 gold. It was much higher longer ago. That's just the natural migration of something that's an asset. We're all going to realize it, I think, when we're much older. And the question is, do you want to risk telling your grandkids you missed the greatest asset in the history of mankind? Might as well take the risk, like you mentioned earlier. They yield some. So that's why I look at. I think every prudent asset manager on the planet gets it. That's why I was shocked when China, the largest miner of gold and the big hoarder of gold, was willing to take the risk. I thought they would just nationalize the miners and we might as well allocate some gold. We want to be the reserve currency of the planet. No one wants yuan. Why? Because we have a shitty system. Sorry to use the word, but they do have a horrible system that you just can't trust. Let me see their general second accounting principles. Okay, wouldn't we see the analysts who can criticize a company's accounting? You can't do that in that country. You can't even criticize the government. But that's the benefit of North America. We criticize everything about ourselves, and that's why we're better for it. So I just want to ensure this. I read the article from the Fed recently last week, and the key thing that struck me was, I'll read this quote. Another potential benefit of a U.S.-issued CBDC would be to preserve the dominant international role of the U.S. dollar. That has already happened. And that's when people tell me they're bearish dollar. I'm like, what are you missing about what's happening in crypto? The most widely traded cryptos are crypto dollars. The world is organically, in a free market, completely just grabbed onto the box. Didn't go for the yuan, didn't go for the Swissy, or they couldn't care less. It wants the dollar. So the world is gaining dominance digitally through crypto. You think the U.S. is going to mess that up? And, if the U.S. does, then we deserve to suffer the consequences. And that's what's happening every day, particularly with those hearings we had in December. They're going down the rabbit hole and getting it. Like, hey, all we have to do is not mess this up, and we're winning this Cold War, and China's just getting crushed.
Yeah. No, that's great. Okay, well, we're hitting up on some time here. I got one hand up. Go ahead, social or influent trend, or go ahead and ask your question. You've had your hand up.
I hope there's no such thing as a stupid question with this crypto. It's, you're seeing it everywhere and how popular, and everybody's just excited about it. What actually backs this crypto? What is backing it fundamentally?
So I like to answer that question with this crypto that your quote used is massively full of speculation. A lot of people trying to buy high, sell higher. They will be purged. I remember doing the same thing in 1999 and 2000 with some of these silly internet stocks. That is happening, getting purged. And then there's the building blocks of the system. Have you heard of NFTs, non-fungible tokens? It's a revolution.
Yeah, it's like taking Adobe Photoshop or Adobe Illustrator, making some art, selling it, and calling it a coin. Okay. Well, obviously you have an opinion about it, then don't allocate it. I'm just saying that.
That's not what it is. NFTs, what they do is they allow artists to monetize their intellectual property. Now, the bottom line is, you can call it is what it isn't. I don't really care so much. The point is, all NFTs are denominated in Ethereum. Can we mute ourselves, please? Are denominated in Ethereum, which means demand for Ethereum. So some people think that's a revolutionary technology. I agree. The bottom line for me is it means demand for Ethereum. Ethereum is making this happen. Now, I mentioned crypto dollars. That is happening. It's like the car replacing the horse. It's a fact in global commerce. If you don't agree with me, talk to Cy Shepard at Visa and MasterCard are all adopting these crypto dollars, even JP Morgan, because it's the better way to transact business. They are being made possible by Ethereum tokens, this blockchain technology. And then there is this thing called Bitcoin. The way I like to express Bitcoin, when people say, what problem does it solve? I like to say, when you get a chance, go to London, the British Museum, and go check out the precious metals forest. That is the thing it solves. The ability to transmit, transact, transport value over time, and something that you can do it without an intermediary. You can do it yourself. It's revolutionary.
No offense, but what is fundamentally backing Bitcoin as a real asset?
I can answer that one.
So what go ahead.
I was just going to say, what's backing it in a lot of ways is, you've got this network. And so when I think of Bitcoin, I think of it as more of, think of it as a network that's built out. It's like the network's like the internet for money. And what's backing it is you have a army basically of capitalists who are investing in real world infrastructure. So this isn't just, people think of Bitcoin, it's like some made up fake thing. I'm seeing hundreds of millions, actually billions of dollars of investment going into real heavy industry infrastructure in the US and around the world to basically convert energy into this monetary network. And so there is real physical energy being created into a currency here. And the reason why they're doing that is because that allows this ability that Mike just explained to transact without an intermediary. And so there are, actual properties of money. And when you look at those properties, Bitcoin checks more boxes, in my opinion. And I think ultimately, kind of objectively checks more boxes than really any other money or type of money that's been created. And so what's backing it is this self-interested innovators and capitalists that are going out and building out this network.
And then as a content creator myself, I'll talk a little bit about NFTs and what is interesting. And I've used this analogy of, imagine if you could have funded Star Wars through ownership of buying a ticket into that through an NFT, and your buddy buys a share of Buck Rogers because he loved Buck Rogers in the 80s as well. Then after that, you actually have a share of ownership in it. And so that allowed Star Wars to get made and allowed Buck Rogers to get made. And so if you're an artist, one of the problems is
Unknown caller.
Sorry, guys.
They're
Apologize for
actually
that.
owning shares of the portfolio of what they're creating through this, and so they're selling a part of their future creation. And so you could have an ownership in, a part of the Beatles if they were being funded by an NFT today. And so, like, the reality, and some people may buy into, some artist that only has like 100 songs out there, and no one actually listens to them, but you may love it completely. And I think that's the enabler of it that people miss when they see, it's where you can actually fund individual creation at the most small level, and the most local level. And, 2,000 fans can actually maybe keep, someone making music. So then maybe 20,000 people can find them, and then 200 down the road. And like, that's the enabler that I think people miss. And I think it is, compelling, from a digitalization of self, over time. And it just allows you to fund things. Like, it's really just a flow of money, from someone that wants to consume something, and then you get actually a share of the future. It is my simple view of that. Hope that helps.
Mike, anything last on that topic, and then we'll take one more question.
Well, I love the question I heard from other people. It's fine. I really appreciate your opinions. I don't have time to explain. Next question, please.
Yeah, well, what I like to try to do with these is we've been in some spaces where it just gets crazy. You get too many people on stage and everybody's asking. And so I'm really trying to keep it to one question, and we'll get an answer, and then we kind of move on. So not really.
I just like to say, until you've got into a good portion of your 10,000 hours really understanding the subject. I mean, I first thought it was silly internet money, and then I realized. And so it's like this. I'd rather just move on.
Yeah, no, I feel you. I get people try to argue with me about it all the time on here.
Yeah, so go ahead, do your 10,000 hours. At least give me 100 hours of reading and studying, and then let's talk.
Yeah.
Otherwise, let's go on.
Yeah. All right, Alexander, do you have anything different
Thanks,
than that last question? What do you got? If you're ready, I know you're up here. I think you're on mute.
Hey, I'm ready. Hey, guys, I heard a lot of the argument that Bitcoin is energy, and clearly Michael Saylor stuff and property. But the energy thing interests me the most. So if it's energy, and I can see the energy component in it, what I'm as an engineer often wonder is, like, how can we get energy out of it if we want to convert it backwards? So maybe one of you guys has an answer.
Well, it's a complex question. I think what it does is it stores that energy in a way to where you can use it across space and time in a different way. And people say, "Oh, you're using words like space and time. What are you talking about?" Well, that's what money solves. Money solves the problem of storing value over space and time, and Bitcoin does both those things very well. So if you have an energy source that's wasted, for example, like a hydro dam that produces too much energy. And so ultimately all energy is just used to do something, right? It may be used to power your car. It may be used to power a manufacturing process, but ultimately it's created into value somehow, right? It eventually gets created into value, or we wouldn't use it. And so you have this wasted energy, and what Bitcoin can then do is convert it into a digital form of value, and then you can transport that across this network and put it towards its most productive use, which may be investing that in some other thing or storing that value over time, I think would be the easiest way to think of it. You can't actually take the energy and use it as a, it's lost its property as actual energy, but it's been converted into value and harnessed in a digital form that has no shelf life and can be moved at the speed of light through this network. I don't know if anybody else has anything to add, Mike or Hike, but that's kind of let's do one more here. We got coffee. Let's see here. You requested, I think, let's go up. All right. We got you on now. I think he's coming on. There you go.
Hello.
Yep. Coffee tweeting. We got you up.
Hi. Yeah. So I think this question is more for Mike, and I apologize. I came in late to this, so I don't know if you've already addressed this, but I've heard it postulated that the value of Bitcoin is independent of the price of Bitcoin. Can you maybe embellish or give me your perspective on that?
It's really more for the people who are more the academic types or whatever. I look at it as, if you want to, I published, if you want to be a trader, it's a wonderful trading vehicle. You can buy at 30, you've been able to buy at 30 and sell at 60 and double your money twice in the last year, or sell and make money. So it's great for trading, but as far as value, it's in the eyes of the beholder. And I just look at it, most important, I think most asset managers get on the plan is, I need some allocation to the space. I need to probably volatility weight it. Means, okay, I'm not going to make 100% of my portfolio, but And within a few years, what's going to happen is it's past patterns continue. People continue to dump. Volatility is going to go down, and it'll be from a higher plateau. But so I look at, but humans, we all have to focus on price, particularly those of us who are traders, and it's just how you adjust to it. And I always say, the lesson I learned in a trading pit: don't trade.
Right.
Yeah,
Well,
the price.
it wasn't more for trading. It's just as I understand it. I mean, the technology is great, but the value of the technology is independent of the price of Bitcoin. Meaning, the value, regardless of whether Bitcoin's 5,000 or 100,000, the value of that technology is still there. It's independent of the price. And so I struggle from that perspective. So if there's anybody on the panel that can kind of, give a counter argument to that.
Yeah.
Well, there's a question of capitalism, I guess, of if you aren't creating something that can be, at some point, the question is when do you not measure it in dollars? Like but right now the world is still dollar denominated as a whole. And I think that's the conversion of, capital that goes in to create the network. It's then monetized into Bitcoin, and you're not necessarily buying your new, generator to put in your next and set of processors to put in your next Bitcoin mine with Bitcoin today. You're converting it back to dollars and reinvesting it. And so there's this conversion of getting it back into a way for people to transact that I think is where the price comes in. But there's a question of what is the value of that network and what is the value of, Ethereum, and then the moving of the rest of the currency market into the blockchain. I think there's this convergence of what's the value of blockchain technology versus price. And, that's like Mike said, we're all people that are trying to make money. I make money in stocks, and we're thinking about portfolios. And Mike, you said to wrap things up, you said you are having your Outlook piece out on Monday. Like, where can people read what you write and get your thoughts on the commodities as a whole? And then if there's any closing comments, we can kind of wrap it up there at 45 minutes in. I know we had a limit on your time.
No, I'm good. I appreciate that.
Okay.
I post on LinkedIn and Twitter much more detail on LinkedIn, and I'm happy to. You can just look for my name and Mike McGlone at Bloomberg on LinkedIn, and on Twitter at Mike McGlone 11. And you can request to get on my distribution list, but do it on LinkedIn. The lesson I learned about Twitter is I don't have time for the silly discourse. Here's my ideas, and do with what you want. Basically, it's what I love. What I do in this business is what we're doing now. To me, is a show and tell. I love being able to talk to you, get the questions, and converse. But my bottom line is publishing on the Bloomberg terminal for the world's institutional investors. That's the bottom line, and it trickles down to things like this.
Yeah, I love it, and I appreciate you taking this time. And let's do it. I think I love your insights, and I think that it's cool because you're such on your fingers on the pulse of everything that's going on day to day. When a lot of times I'm more kind of in the clouds thinking of things macro. So I'd love to make it a reoccurring thing, Mike, and I appreciate your time. Yep. And we'll talk soon.
Well, thanks for having me, and a good weekend, everyone. Stay safe and be careful. We have this big nor'easter hitting up in the northern part of the U.S., and so be careful.
All right.
Good luck,
have a good
everybody.
weekend. Thanks, guys. All right. Thanks, Hike.